Good afternoon. This is Business Live with me, Ian King. Well, for the first time since November 2021, the Bank of England's Monetary Policy Committee has met and decided not to increase interest rates. There had been 14 consecutive rises, taking the rate to its present level of 5.25%. But the day after inflation unexpectedly fell in August, the committee voted by 5-4 to leave rates where they are. Well, joining me now for more on this is Rob Wood. He's Chief UK Economist for the Bank of America. Rob, good to see you this afternoon. You don't think there's going to be another rise after this? You think that's it?
I do. I think this is the Bank of England done with rate hikes. I think they're going to be at this level for quite a while yet, certainly through to the second half of next year, maybe even longer. The Bank of England has taken heart from the fall in inflation, which suggests that their past rate increases are starting to work to bring down inflation. They're hoping that's going to continue, and crucially, that pay growth is going to slow as well. I think they're going to have to keep interest rates roughly around these levels for quite a while they wait for that to happen. But yes, hopefully this is the end of the increases.
What do you think tipped the balance in? Was it that August inflation number, or was it the labour market? I mean, there's some interesting lines in the minutes about how they've noted the labour market softening.
It was definitely the inflation numbers that tipped the balance. I think it was some good news yesterday. Not that common in inflation recently. So the bank's taken heart from that. But it's wider than that. There are other signs that the UK economy is slowing down. It was already not growing that fast anyway, but growing a bit slower. Unemployment is starting to rise, which the Bank of England will think will eventually feed through to weaker pay. So it is a range of things, but definitely the inflation numbers tip the balance.
Those of a hawkish persuasion will say, hang on, inflation is still 6.7%. It's still more than 3 times the bank's target rate. How can they sit on their hands like this?
That's right. And I think we can't rule out further interest rate increases from here. I don't expect them. I think this will be enough. But you're absolutely right. Pay growth at the moment is above 8%. This is far too high to bring inflation down to 2%. Inflation itself is still in the high 6s. This is too high. So the Bank of England will have to keep interest rates at these levels, which do put people under pressure. They need to keep growth weak enough that inflation comes down. What they're trying to do here and what they're trying to balance is not doing too much. They don't want it too cold. They don't want it too hot. They're trying to trace this line down the middle, and they think a pause here while they wait for more information is the best way of doing that.
Now, the other key piece of news, which is probably going to get overlooked in all the excitement over bank rate, is the fact that they're stepping up quantitative tightening, the unwinding of their pandemic-era asset purchases.
That's right. So they sold £80 billion worth of gilts last year. They've announced they're going to do £100 billion over the next year. These are obviously enormous figures. The Bank of England is selling these down. Now, their view is that this is not making an enormous difference to the price of government debt in the market, so that they're quite safe to go ahead and speed this up. And the way they think about this is that it's probably better to get rid of these holdings off their balance sheet. It gives them a bit more flexibility in the future.
It does, however, have the same effect as an interest rate rise. Is it possible to sort of quantify that?
Well, the Bank of England would say the effect is very small. I think people on my side of the fence in the market would say the effect is somewhat larger. I mean, ultimately, with the flows, people buying and selling government debt, they're so large, it's obviously very difficult to say precisely what the effect is. I certainly think it's fair to say the purchases made at very stressed times in markets, both for the effect that it had at them when liquidity was low, but also the signal the bank was giving that it would do whatever it took to support the economy, meant purchases probably have a much bigger effect than the sales now. So I think they're probably safe to go ahead with 100 billion. They're being cautious there anyway. But yes, it will add a little bit to the tightening that we get from higher interest rates.
All right, really busy afternoon for you, Rob. We do appreciate you sparing the time to chat. Thank you.
Thank you.
Some other business news stories for you now. And a breakthrough could be imminent in the long-running film and TV scriptwriters strike in the United States. The Writers Guild of America Union, which represents the striking scriptwriters, is due to meet today for a second day of talks with the Alliance of Motion Picture and Television Producers, which represents Walt Disney, Netflix and other media companies. Well, yesterday's meeting was attended by senior industry leaders, including Bob Iger, the Disney chief executive, and David Zaslav, who's chief executive of Warner Brothers Discovery. The strike, which began in May, has led to production hold-ups in both the United States and elsewhere because it has coincided with a strike by the Actors Union, and that dispute remains unresolved. The US telecoms and technology giant Cisco is buying Splunk, the cybersecurity specialist, for $28 billion in its biggest ever deal. The pair said that together they would be one of the world's biggest software companies. Chuck Robbins, the chair and CEO of Cisco, said, "Our combined capabilities will drive the next generation of AI-enabled security and observability. From threat detection and response to threat prediction and prevention, we will help make organisations of all sizes more secure and resilient." And the chief executive of Next warned today that the recent softening of the labour market could hit consumer demand in coming months. Lord Wolfson was speaking as the fashion retailer reported a pre-tax profit of £420 million for the 6 months to the 29th of July. That was up 4.8% on the same period last year. Well, Next also upgraded its full-year profit guidance for the third time in 4 months, predicting that inflationary pressure on both selling and on operating costs will continue to ease. The shares are currently ahead by 3.5%. Now, Rupert Murdoch has spent almost 70 years building a media empire, and today he announced that at the age of 92, he's relinquishing day-to-day control. He's stepping down as chair of both Fox and News Corp. The two companies combined are worth more than $25 billion, and his son Lachlan is going to become chairman of both. Well, joining me for more on this now is Matthew Garahan, head of digital platforms at the Financial Times. Matt, welcome to you. Rupert Murdoch has never shown any inclination to step aside from his businesses. Why now?
Well, he's 92. I mean, it's pretty old. I don't think I'll be running two companies when I'm 92. Any companies when I'm 92. I mean, what we're hearing is that it's time to step back. He'll continue to be active. We can expect that his editors, who've gotten used over the years to phone calls late at night, emails about stories, they'll continue to receive those. He's going to be chairman emeritus, but he'll have a less active role. And as you said, Lachlan will ascend to chair both companies.
Yeah, now, Lachlan has some big challenges on his plate here, not least at Fox, which has had a pretty torrid year.
Yeah, there was the big settlement over the claims made on air by some other presenters about the election fraud, huge payout to Dominion voting systems, I think it's called, and very, very painful to take a hit like that. There may be other claims yet down the track. The bigger question, though, is whether Lachlan is, you know, the succession question seems to be settled, and that's been, you know, obviously the HBO series and endless fascination about the Murdoch family and who succeeds. He's in the chair at the moment, but there may yet be problems down the track for him too.
And this is because of the Murdoch Family Trust, which
Right.
ultimately controls these businesses.
So the four elder Murdoch siblings, Prue, Liz, Lachlan and James, all have an equal vote and will inherit an equal vote upon when Rupert's no longer around. James, as we know, sort of diverged from the family. He and Lachlan don't get on these days. Liz is sort of seen as Switzerland in this respect. Still talks to both of them. Less clear about Prue. So there may be an alliance yet formed in years to come, which could see control change again.
Another challenge that strikes me that they're going to face, though, is the forthcoming US elections. Now, I mean, Fox News got behind Trump last time, but they've had a bit of a falling out. I mean, Rupert in particular has been pretty damning about Donald Trump.
He said things, I mean, I think one of the earlier Michael Wolff books reported comments from Rupert that weren't particularly complimentary about Trump. And there's another book out on a Wolff book out on the Murdochs, I think, the next couple of weeks. It is, you know, it's interesting. I mean, where does Rupert park his allegiances? And Fox News is hugely influential. But Fox News does well when the Democrats are in power and does pretty well when the Republicans are in power as well. So I don't think they'll be too fussed either way.
Yeah, it's a stable business. Now, what about the overall shape of the empire? Last year, there was an attempt to reunite News Corp and Fox. That fell apart around this time last year.
Yeah.
Could that be revived?
I think it could, actually. I don't think they should rule that out. There were some shareholders who pushed back, and I think the Murdochs concluded that they didn't want to rock the boat, but there were some mutterings about whether their advisors had done as much as they could to make this happen. So I think it could come back on the agenda. I mean, you know, does it make sense to have two media companies that share so much, you know, newspaper assets and publishing and TV on the other? And they were together once, of course. I mean, years ago, it was one major entity. Yeah. So I wouldn't rule that out happening again.
And what about the UK print assets. I mean, it's been suggested that Lachlan doesn't spend as much time in the UK as Rupert did. Yeah. Is there a question over their future ownership?
I think he loves them less than Rupert. I mean, Rupert has ink in his veins, right? I mean, you know, he owned Sky for so long, and he was often around in the building. I think he still is around in the News UK building. In his farewell note there, he said he'll continue to be around on Friday afternoons, which is a nice dig to the 3-day work culture which we have post-COVID. So I think Lachlan has a challenge. I mean, he spends a lot of time on the West Coast, he spends a lot of time in Australia. The UK is, the sort of beating heart, or it was the beating heart of the empire with those print assets. They're probably a little more unloved by Lachlan, so who knows what he'll do.
Oh, Matt, got to leave it there. Really good of you to pop in today.
Thanks.
Thank you.
Cheers.
Well, the pound sold off after the Bank of England kept interest rates on hold. At one point this afternoon, sterling hit its lowest level against the greenback since the 27th of March. Against the euro, it's hit its lowest level since the 20th of July. On the equity markets, well, the European markets have closed to the downside. There we go, all of them off by more than 1% apiece. Here in London, the sell-off hasn't been quite as pronounced, possibly because of the big number of dollar earners in the FTSE 100, but nonetheless, the mining heavyweights have weighed on the index this afternoon. The FTSE finishing down just over 2/3 of 1% lower. The biggest percentage faller this afternoon is Ocado. That has dropped by 16% on the back, 19% now. Look at that, crikey. That's its biggest one-day fall in quite a while. That's on the back of comments from the broker, Exane BNP Paribas. On the upside, JD Sports, whose chief executive is on our morning programme, that's the leading gainer. That was up nearly 8% after its results were much better than expected. Next, another gainer on results. Outside the FTSE, you can see a couple of the main gainers on the screen there. The Bank of England's pause on interest rates has lifted all the property sector. British Land ahead, and Derwent London, company whose CEO has been on this programme in the not-too-distant past, that's ahead by 1% right now. Over on Wall Street, markets have opened to the downside following the Federal Reserve's hawkish comments last night. The chipmaker Broadcom is off 3.5% on a report that Google has discussed dropping it as a supplier, while Cisco is off on that big acquisition. Rupert Murdoch's two companies, by the way, Fox and News Corp. Well, Fox is up 2% right now, News Corp up by just under 1%. As for the oil price, well, that seems to have pulled out of its two-day sell-off. A barrel of Brent crude will currently set you back $94.04 a barrel. That's up just over half of 1%. Joining me this afternoon is Jamie Niven, Senior Portfolio Manager at the European Investment Manager, Candriam. Jamie, good to see you. Before we talk about the UK, Federal Reserve, obviously, quite a hawkish commentary last night. The main US stock indices are falling for the third day running. People clearly think rates are going to be higher for longer now there.
Yeah, I think the main thing from the Fed was the dots. Now the dots were evidently higher for next year.
So you better explain what the dots are for the uninitiated.
Yeah, of course. So the dot plot is the expectations of the FOMC participants for the Fed funds rate for the forthcoming years. For this year, there's an expectation the median dot has one more hike. And for next year, there's an expectation of 50 basis points of cuts. Now, it's interesting that the market's taken it very hawkishly because when we listened to Powell, he was very balanced. He talked about risks both ways. I think when you look into the dots, as I say, the market participant or the FOMC participants' expectations, you'll see that it was very close between 2 or 3 cuts next year. Powell was also very clear in saying that this is a best guess of the FOMC. There's no plan, it's not preset, it's not discussed, it's individuals' expectations. So personally, I wouldn't read into it too much. It's very clear that they're data dependent now after the most aggressive tightening cycle in a generation. So we'll continue to watch the data and see how that evolves, and the expectations will evolve from there.
Yeah, now, obviously here in the UK, the Bank of England's hit pause, sterling has sold off. What are the prospects for the pound from here, do you think?
To be honest with you, the pound isn't looking that attractive right now, given the expectations for the Bank of England. I think personally that, look, if we take a step back and we think about what's happened in the past 4 or 5 years, it's clear that interest rates are going to be higher for longer. No one's doubting that. It's probable that the neutral rate, so that is the rate where there's no inflation's back towards target, is probably higher than it has been. Factors such as deglobalization, decarbonisation, retirement of the baby boomers, I could go on. They are all reasons why the neutral rate's higher. That's globally. However, in the UK, it's a slightly different story, and I think that's Brexit-related. The lower population growth that's very clear due to less migrant workers means that the potential growth rate in the UK is probably lower than it has been, and therefore the neutral rate is potentially the same, or at least not as high or not as much higher as it is elsewhere. Therefore, the restrictiveness of monetary policy is certainly more so in the UK. And I think that's one of the reasons, we've heard Bailey talk about it in past press conferences, that's one of the reasons that the Bank of England have been quite dovish over the last, let's be honest, 12 months compared to other central banks. So yes, going forward, if this continues to be the case and we continue to see the deterioration in UK data, then I think that there's potential for the Bank of England to actually start cutting rates sooner than the market expects, which obviously is not a positive for sterling.
A lot of homeowners will be very glad to hear that, though, Jamie. Good to see you this afternoon. Thank you. Still to come here on Business Live, I'm going to be speaking to the economist and economic historian Edward Chancellor about the real story of interest. Don't go away. Has rallied, moderation, interest rates peaking.
Up at 6%.
The highest for 14 years.
Will that be the peak? Will it be a little bit lower?
It's closer to a potential crash.
So many words, so many meanings. But what do they mean for you and your finances? Stay up to date on Sky News.
I'm Martha Kellner and I'm Sky's US correspondent based here in Los Angeles.
It's turning everybody into, a crazy, violent drug addict.
How are you feeling? I am angry. Are you a hypocrite, sir? Will your candidates win?
I hope so.
I gotta be realistic. My sister's dead.
More than 4 weeks on, there's no murder weapon and no suspect. Mum, how are you feeling today?
Jeffrey said, you answer to Ghislaine, you just don't cross her.
I'm so excited.
Severe nightmares of these people coming in and just taking me in the middle of the night.
I've watched as whole towns were torn apart by natural disaster.
I'm alive and I'm thankful for that.
We take you to the heart of the stories which shape our world.
A lot of cases that I know are reported from Ukrainian missiles themselves.
Ambassador, with respect, I think that's preposterous.
Till I get married, till I better.
Fly Emirates. Fly better.
Thank you.
Welcome back. So we had no increase in interest rates today, although that doesn't necessarily mean they've peaked. But what it does show is that the government and the Bank of England are getting on top of inflation, and that will there be better times ahead? Well, so they hope. I'm joined now by Edward Chancellor, the economist, Reuters columnist and author of The Price of Time, the real story of interest. Edward, welcome to you. A lot of homeowners will be quite happy about today's news. Should they be relieved?
Yeah, obviously. I mean, if they were going to have to start, paying higher mortgage costs, then it'll be a relief. And I think it was pretty much inevitable that the bank had to stop. As you probably know, UK households have ratcheted up a huge amount more debt relative to their income during the periods when interest rates were very low. And this was beginning to hurt a great deal. So, I mean, it's relief for the homeowners, and it never seemed to me quite right that the homeowners should bear the huge brunt of the monetary mismanagement of recent years.
Except, as you point out in your book, I mean, until about 18 months ago, we had zero interest rates in many parts of the world. In some parts of the world, negative interest rates. You argue that the consequences of that are going to last for a long time.
Oh, absolutely. I mean, I think that the financial and economic story of this decade will be the ramifications of getting away from this era of ultra-low interest rates. There's one economist said that interest rates gets into all the cracks, and these low interest rates and negative rates were a global phenomenon. And what we see now are the global consequences, ranging from collapsing real estate markets, particularly in China, but other parts from Sweden, Canada, Australia, you name it, and Britain sort of roughly in the middle there. You've got the problems in pensions, and you've got the problems in commercial real estate and so forth. So we will be living with the attempt to normalise interest rates, and we will. I think we're going to have just a progression of mini crises. And we have to cross our fingers to hope that those mini-crises don't all join together into a sort of maxi-crisis of the type we saw in 2007-8.
Well, quite. I mean, I should remind the viewers, you wrote a book in 1999 called Devil Take the Hindmost, which was at the height of the dot-com bubble, in which you emerged that there would be an almighty crash. Yeah, and that subsequently happened.
Yeah, it was pretty obvious. I mean, anyone who'd read, a chapter of history would have known that the dot-com bust was going to occur. And then I wrote another book, actually, called Crunch Time for Credit in 2005, saying that actually no one seemed to understand what was going on in the credit world, and that came to a collapse too. Now, this is more, the interest story is in a way more complex and more diffuse. And so one's always slightly surprised, or at least I've been slightly surprised, expecting crises to occur, and then you see the US regional banks going down, and last year we saw the UK pension funds on the ropes. So one has to sort of keep one's eyes out. The only thing I'd say is that the Bank of England is trying to control inflation. That's its main remit. But when you've kept interest rates down very low for too long, in my view, then you've built up a huge amount of financial instability in the system. So the question is whether there's now a trade-off between maintaining financial stability and keeping interest rates low helps to do that. But then are you at the same time able to control inflation? It would be pretty remarkable that interest rates, the bank rate was capping out at 5.25%, which is actually 75 basis points below the post-war average bank rate. Yeah. And with inflation itself nearly 2 percentage points above that. So I think that the inflation story, which, as you know, it's a cyclical one, so it'll come and go and come and go, I think that'll run, and I think that'll probably force the bank at some stage to push interest rates up later.
Yeah, we still have negative real interest rates. People shouldn't forget that.
Yes, I think we're going to have those, and we've had those for years. I mean, there are people coming to maturity who lived only in an age of negative rates. But I think now, particularly with government debt at roughly 100% of GDP, the government has a huge interest in keeping the interest rates below the level of inflation and slowly inflating off the debt. And although the Bank of England is sort of putatively independent, it is, after all, one of its remits to help government policy. And as you know, the bank has been demanding these very high checks, from large $15 billion checks from the Treasury in order to pay off the losses on its portfolio. So this will, the low interest rates will help on that front.
OK, Edward, lots more I wanted to ask you, but we're out of time, I'm afraid. Good to see you. Thank you.
Thanks.
That's it from me. I'm back at 11:30 tomorrow morning. Hope very much to see you then. In the meantime, stay tuned. Up next, it's Mark Austin with the NewsHour. See you tomorrow. Cheerio.